4 reasons why Ethereum is criminally undervalued. Since its inception, the Ethereum network has piqued the curiosity of both investors and developers because to its safe and superior features, as well as its claimed development potential. The native currency of the network, Ether, is the second largest in terms of market capitalization, trailing only the King coin. It was worth $1,862 at the time of press, less than half of its peak of $4,356 in May. Analysts, on the other hand, say that its current price does not do it credit. In a recent video, analyst Lark Davis highlighted certain characteristics of the blockchain and contrasted them to the leading online payment system PayPal to demonstrate the asset's extreme undervaluation. PayPal had a market cap of $340.20 billion at the time of press, which was more than $100 billion higher than Ethereum's market size of $217.41 billion. 1. Transaction settlement. However, when the volume and value of transactions for both payment platforms are assessed, this evaluation criterion appears to be unjust. The network resolved transactions worth $1.5 trillion in just the first quarter of 2021, while PayPal's total for the entire year of 2020 was $936 billion. At its current rate, Ethereum transacts the same amount in a month as PayPal does in a year. When compared to the daily settlement volume on Ethereum, even the Bitcoin blockchain lags far behind. According to Money Movers, the former settles at roughly $9.93 billion every day, whereas Ethereum settles at more than 3 times that amount. 2. Users. When it comes to the total number of users on each platform, PayPal comes out on top. It had 392 million active user accounts in the first quarter of 2021. While Ethereum has 160 million unique addresses, most users have numerous accounts, thus the actual number of human users could be a third of that. The daily rise in users, on the other hand, was 225,969. It should also be mentioned that, in comparison to the 6-year-old Ethereum network, PayPal has gathered these users since its founding in 1998. 3. Fee for transaction. PayPal has a number of different transaction fees for various users that can range from 2.9% to more than 4% of the transaction value. At the time of press, the Ethereum gas fee was 18.76 GWI. Even at its height in 2021, it was only $0.00069. While there is speculation that this will rise in line with network demand, the analyst highlighted important developments such as its shift to proof-of-stake consensus, Layer 2 solutions such as Polygon that allow asset transactions for a fraction of a penny, and the expected introduction of network sharding by 2022, which will reportedly keep the gas fee low. Furthermore, PayPal as an asset class delivers 0% dividends, and their future introduction would be in the form of dollars rather than PayPal stocks. However, since the start of Ethereum staking in December of last year, stakers have been able to earn an average of 8% annual returns in ETH. This is expected to rise to 25% after Ethereum and Ethereum 2.0 are integrated. It also has a higher value proposition because ETH prizes can be restaked to improve their yield over time. Even DeFi programs that run on the Ethereum network provide significant staking payouts of 5 to 10% on USDC or other currencies. The analyst continued, saying, The Ethereum blockchain is so much more than just a payment system. It is a full financial product ecosystem. 4. Adoption. The use of Ethereum by huge financial institutions is simply one more indication of its future potential. In April, for example, the European Investment Bank printed $121 million in digital notes using Ethereum. Recently, the Bank of Israel picked the network to issue tokens representing digital shekels.